That said, let's shift focus to JSW Steel then. Mr. Jayant Acharya, the Joint Managing Director and CEO of the company, joins us on the show. Hi, Mr. Acharya. Thanks a lot for joining in. And it appears your subsidiaries actually have done very, very well. So first, let's focus on demand. What are the trends you're seeing on the industry at current reckoning?
Demand has been, fairly strong. We saw an 8.9% growth in the quarter two. This is on the back of a larger base, let's say, over the last few years. So demand continues to be strong in spite of a seasonally, weaker quarter, let's say, and a prolonged monsoon. Second half, I would say the demand will be better. Post the implementation of the new GST rates, the sentiments have turned quite positive. We see economic activity and buying across multiple segments. So I think the consumption story will really pick up post this, because we have interest lower, we have the benefit of lower inflation, we have the benefit of lower income tax, and on top of that, the GST. So all combined, I think, will spur consumption in a good way as we go forward.
All right. What about demand? Demand's strong, right, as you're saying. But what about the scope of going ahead and increasing prices? There's a big gap, if I look at it, between domestic pricing and the landed cost of imports.
So, one is that it's a seasonally weaker quarter. Secondly, the fact that the supply which came in terms of the production was a little lumpy, let's say, from the domestic producers. So that production, I think, was a little bit more during these last few months. But by and large, now we see that absorbed. Pricing, we feel in the monsoon quarter has now more or less stabilized. Between November to December, we should see a price improvement on the back of a better demand, better consumption. And as you said very rightly, there is a discount to import prices. So all in all, a seasonally stronger H2 will see improved prices going forward.
Okay, all right. Coking coal cost will move up a little bit, if you look at it on a quarter-quarter basis. But directionally, since operating leverage, higher prices as well will play out, do you think the EBITDA number can actually improve?
So if you were to look at the outlook, so one, reiterating that the volumes will be better. We already had good volume numbers, as you saw in quarter two. Going into quarter three and quarter four, we are seeing that Dolvi has ramped up well, BPSL has ramped up well, and JVML now I think will be able to deliver, let's say, the full capacity now in the second half. So volumes will be better. Demand is likely to be better for the second half. Pricing, as I said, between November to December should improve. On the cost position side, we should be able to mitigate the impact of the coking coal cost through efficiencies. However, that said, also keep in mind that we have taken our blast furnace, one of our blast furnaces in Vijayanagar, for a shutdown for expansion of the capacity by 1.5 million tons. And that's for a period of about 150 days. So there'll be some shutdown related impact cost which would come in. But other than that, on an operational parameter point of view, I think we'll be range bound on cost. The benefit which could come is on the raw material side would be iron ore, because iron ore prices have been elevated in India. And internationally as well, we expect a reduction in the iron ore prices in the coming quarter, in the October-December quarter. So that should be positive.
Okay, what about international operations? How is the US as well as Europe shaping up? Europe, in fact, it looked pretty good for the last quarter.
Italy has done well last quarter. The rail shipments were better, the rail volumes were better. We expect Italy to be operating in a stable environment for the next half as well. As far as US operations are concerned, the volumes, the utilization of capacities were better. From a margin perspective, I think it has been similar, except for the fact that there was a pipe order which slipped into the next quarter, due to which you will see in print a lower EBITDA number. But otherwise, Baytown and Ohio put together, we have done about $12.2 million of EBITDA in the last quarter. So overseas, if I look at Italy and US put together, I think our operations have done reasonably well, and we should be able to have similar kind of growth in the second half as well. Only one thing I would just like to highlight is that we have the expansions in Ohio kicking in during this second half. So there will be a shutdown for a period of time to implement that particular equipment, so that there will be some impact on the volume. Other than that, we'll be fine.
Very quickly, Mr. Acharya, before we let you go, China is talking about this anti-involution policy. Your reading of the same, and have you seen some evidence on ground? Chinese are reducing production?
Yeah, so China involution policy is a big positive. We are seeing moderation already, which has taken place in the first few months. We should see a 30 to 35 million ton reduction in the Chinese steel production in this calendar year. And going forward into the next year, you will see some moderation further as well. So that is good for the world at large. We are expecting that the exports from China next year hopefully should moderate. The domestic production, the domestic consumption has also softened. Although I think majorly the housing sector has been weak, but it's been made up to some extent by better manufacturing, better automotive, and some infrastructure investments which they have improved on. So I think the domestic consumption should improve with the Chinese economic push which is being given. Production is coming down, and that should reduce exports, which augurs well for the industry at large.
Thanks a lot, Mr. Acharya, for joining in and giving us an outlook with regard to the second half of the year. Chinese reducing production. That's going to be the greatest news, I think, both for their industry and the global steel industry as well. Thanks a lot.